the biggest problem that I think people deal with is they think that everything's going to happen immediately,
Mm-hmm.
and it's not. Real estate is not a get rich quick. It's a get rich for sure. If you follow the path and you do the right things and you stay consistent with it, and you're going to make mistakes and you're going to have challenges and tribulations, and there's going to be times that you want to give up. But if you stay consistent on the path, you're going to get to that place where you're free. There's an unlimited potential in the business. And so that's where it's even more important that you get into that place of alignment where you name your number, where you set that line in the sand of what is it that you need to live the life you want to live. What's the fuel? What's the recurring revenue that you need to cover that life? But then even more important than knowing that number is actually deciding what that life is going to look like.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter.
And I have Stephen Pesavento with me. Did I even get close on that one?
You got
I
it.
got it.
It's
Oh,
simpler
man.
than it looks.
Well, he is with Von Finch Real Estate and Investments, Von Finch Investments. And you're actually, it's vonfinch.com is your website, Von Finch Capital. And they are private real estate investment firm. And Stephen, why don't you take it and give us the bottom line? What is your history? And what got you into real estate? Like, just bottom line it.
Yeah, well, I think Tarantinoing it. Today we run a private equity company, $180 million of real estate under our belt, 30, almost $50 million of investor capital has been invested in the deals we do. And when I started in real estate, I didn't have any experience. I didn't have a track record. I didn't have family that was doing it. I didn't have, any of the stuff that you sometimes start to believe are the things that are what is required to be able to get involved and get started in this business. So going all the way back, I went the traditional route, went to school, got a job, worked for a 401k and a gold watch. But within about 2 years of working in management consulting, I realized that, this wasn't it. I had the great ego of a big title and, the guy who comes into big companies and gets to change things and work with really smart people. But I felt like there was more. And I felt like I was missing that passion, that purpose, that drive. And I looked around at the other people who were working in the 9-to-5 world, and I didn't want their life. And so, I left, started my trajectory towards working in high growth startups and tech, moved out to Boulder, Colorado, which is a big tech hub. Mm-hmm. And, I started some startups, worked with some really smart people on some things. And, eventually fast forward, I was in this place where I kept looking back and I kept thinking, like, what is it that I really want to do? What can I be really excited about? What am I passionate about? And since I was a little kid, I either wanted to be a chef like Emeril Lagasse or I wanted to renovate houses like Bob Vila. And after all that HGTV, it finally paid off. I got into real estate and happy to dive into more detail, but kind of the rest is history.
Why did you choose real estate to break through to your financial freedom? Why? I mean, you said chef, rehab. You did a lot of stuff in between. You said there was something missing. Why real estate? How did that fulfill it?
Well, I worked in kitchens from 12 until 20, so I already kind of had the experience of what it was like to live the blue-collar life of working in the back. And I knew that that wasn't going to be the path for me. Okay. I grew up very working class family, 2 parents who loved me but hated each other. And there was just a lot of stress and a lot of pain and, the kind of trauma and tragedy and challenges that you kind of deal with growing up gave me a drive. And I associated a lot of those problems with money. Now, as an adult, as someone who's done a lot of personal and self-work, I can see that money wasn't the only problem, but it was the one that everyone blamed everything on. So I had this drive to go and find a way to get wealthy, to get rich, to be able to have the things that I didn't have and not have to live that life. And the reason that real estate was at the top of the list was because for so many years I had wanted to do it, but something always held me back from taking that step forward. And I was in this moment of total clarity. I was in alignment, and I just decided, hey, I'm going to go do this. I'm going to go figure out how to buy real estate and how to be that person. And I'm an all-in kind of guy. So when I go in, I fired all my consulting clients. I had no other way to make money except to figure out the real estate game. And the reason that I chose real estate was for two reasons. One, because it's simple to understand. Everybody lives in a home. Everybody lives in some type of residence, and it's a core need. And so it's something that I could easily wrap my head around. And the second reason was because I just felt like I was constantly looking for other people who were dreamers like me, who believed that we could all live a better life. And personal development is so core to the real estate industry. Like when you're an entrepreneur, when you're going on your own, when you're starting down the path of real estate, whether you're an agent or a broker or whether you're an investor like myself, like you have to get up every day and choose to continue to go after this really hard thing. And so I just found my people. I found people who were kind of, on that same path, and fortunately I had a lot of success with it.
I love your description because it is very much my experience as well. Real estate that's why I have my show the way I have it. Why I use real estate to break through to your financial success is because it's not always an easy vehicle. It's productive. It can give you great returns, but it can be also quite a tedious master. You will have your backside handed to you at least once in your career, if not several times. Almost everybody I know who is a long-term investor in real estate can talk about how they lost $500,000 here or $1 million there, or Vod Khalif, 50 million. It will hand you your backside, and who you choose to be and how you choose to show up every day in some ways ends up being almost more important than the deal itself.
Yeah. Well, and I feel like that's what I'm so grateful for. I had a big chip on my shoulder, and I used that chip to drive me to the place where I hit some success. But once I decided to kind of let go of that weight, I look back and I'm grateful for the gift of growing up with a traumatic childhood and with challenges, because it's through those challenges that you realize that you can break through, that no matter what happens, there's always another step that you can take forward. And when it comes to starting a business in real estate, there's going to be a lot of challenges. And I think when it comes to getting wealthy and getting financially free, there's a lot of different paths to get there. There's a lot of vehicles. Real estate's a great one. Business is a phenomenal one. You can, of course, do the business of doing real estate, but there's so many other options that you can choose. And for me, I chose real estate because it was something I understood. It was something that I was able to wrap my head around. It was something that I built a lot of experience in. And it was something that I believe a lot of other people, 90+% of millionaires got there through real estate. If you find a proven path that other people have already beat the trail down, you might as well go on it.
I just interviewed Kathy Fetke, and one of the things that she said was what she noticed was people who had made it rich, whether they made it rich through real estate or they made it rich through another vehicle, and they put it in real estate. So ultimately, she's a little like my words for her statement. Real estate ends up being where you're going to end up anyways, is investing in a vehicle like a real estate.
Yeah.
But the traumatic childhood, it's funny. I'm putting together a new speech, right? So I have a series of topics that I talk on at meetings and stuff like that. And one of the new speeches is there's a section in it that specifically is about how my traumatic childhood helps me to learn how important it is to really love the life I'm living and really be a person that I'm happy with at the end of the day and every morning. And that, like, whatever I'm doing, whoever I'm choosing to be, whatever I'm engaging with, whether I'm a mom, whether I'm a wife, whether I'm a real estate investor, whether I'm a professional, whether I'm a consultant, or a registered investment advisor, ultimately, that is what I'm going to be the happiest with at the end of the day. That's what lets me sleep well. And then I get up the next morning and I'm like, yeah, let's do it all again. When I was a kid, I didn't want to do it all again. I didn't know that. I didn't know that feeling as a kid. I didn't want to get up and go to school. I didn't want to get up and deal with my family. I didn't want to get up and deal with, feeling like a loser and a failure and being bullied and teased. No, I didn't want to deal with all that. That hurt. That was ouch. Right? And now I go, no, I want to do it again. Go to bed. I'm happy. I wake up and I want to engage. And real estate will be an area that will serve you and inspire you and bring you on board. And it will be like, no, not today, sweetheart. Boom. I'm like, okay, not today. All right.
Yeah, but you can operate from that place once you have enough clarity and you're in enough alignment that you know you're going on down the right path every day. Because, you know, the biggest problem that I think people deal with is they think that everything's going to happen immediately, and it's not. Real estate is not a get rich quick. It's a get rich for sure. If you follow the path and you do the right things and you stay consistent with it, and you're going to make mistakes and you're going to have challenges and tribulations, and there's going to be times that you want to give up. But if you stay consistent on the path, you're going to get to that place where you're free. There's an unlimited potential in the business. And so that's where it's even more important that you get into that place of alignment where you name your number, where you set that line in the sand of what is it that you need to live the life you want to live. What's the fuel? What's the recurring revenue that you need to cover that life? But then even more important than knowing that number is actually deciding what that life is going to look like.
Right.
And when you can start to have that vision in your mind, when you can understand, you know, how you want to feel, what you want to do, what kind of impact you want to make, how your family is going to feel, what type of experiences do you want to have with them, and you use that as that piece that continues to reinforce the reason that you're doing all this stuff, that you're going in, that you're learning, that you're connecting with the right teams and partners, that you're getting in the right communities, that you're getting the right coaches and advisors and mentors and people around you that are going to continue to help you get closer to that place that you want to be and ultimately live there. Because I think one of the biggest mistakes that people make is they are living a life that's designed by somebody else. They're doing what they are told to do.
Yes.
They're doing the traditional path, go to school, get a job, work for a 401k, and hope someone else will take care of you. But when you actually wake up and realize that that doesn't work, it maybe worked for our grandparents, it might have worked for some of our parents, but it sure in the heck is not going to work for this generation. And the reason is because the system's broken. But they want you to stay in the system. They want you to continue to do that because big companies need employees who are more like cogs in the machine than people who are going to be able to wake up and make a decision about what their life actually is. And what you're seeing is this huge movement of people who are going independent, who are going down the path of starting their own business or going into investing. And look, you don't have to leave your job in order to eventually get to that point of being financially free, but you do need to get clear on what kind of life you want to live and start thinking like an investor. And once you change the actions that you're actually taking and start thinking differently, step into that uncomfortable space from the known that is your life today to the unknown about what your life can be, that's where some really beautiful things start happening.
That's beautifully said. That's actually really beautifully said. Very well said. Thank you. Thank you. I appreciate you having thought through that carefully. People will rant against the system and say, it's the system and I'm locked in it. Or people will say, the system sucks because it's broken. But you didn't stop there. You described what it is and how it's out of sync. And because the system could be, I'm a female. The system could have been get married, be a mom, let your husband or your partner earn what they're going to earn, and then don't think that you're going to have a career. Your life is about serving your family. And that's a system too. And it also is broken in my mind. Right?
Yeah.
Because
I mean, the system is whatever it is that you're convincing yourself that you're held back by. Because as soon as you go into the victim mindset of thinking that it's your boss's fault and it's not your fault, or you're not accountable for it, then you have no power. Yeah. Then you really do give it up to everybody else. If you're that mother who's thinks that they have to be the person who's going to stay at home and go that traditional route, you could either be super excited about it and feel like grateful that that's the opportunity, or you could look at it from the perspective that, maybe there's something else that you want to do. Whatever it is, you get to decide, and that perspective is what fuels the way that you feel. And if you feel like you're a victim, you are a victim.
Yes.
But it's not because of someone else, it's because of yourself.
It's
and nobody wants to tell you that, because in today's society today, people are rewarded for being hurt. They're rewarded for blaming other people. And the tragedy of that is that it only hurts themselves.
Oh, completely.
You know, everybody has a beautiful opportunity in this country, and that's the reason why some of the most successful people are immigrants that come here, because they come here without the expectation, without the feeling like they're owed it by somebody else. They go and they do the work and they think differently. And the beautiful thing is we can all think like that. We can go back to the original traditional American values that says, if you want to do it, you can find a way.
Yeah. Yeah. And to me, the distinction is what you just said. Am I in victim or am I in choice? And there's so many words for that, right? Am I in judgment or am I in observation, right? Am I in Eckhart Tolle? Am I in the pain body, right? Or am I in my higher self? You pick the words or the system or the process. I don't really care. What I care about, what I think we're talking about, what we're anchoring is you choose. If you don't choose, you will be a victim. You will find a way to blame. If you choose, if you stand in your own accountability, responsibility, choice, then, right, then you get to move forward. And each of us have a story. Kathy, Jay Massey, you, me, each of us have a reason as to why we eventually at some point went, no, I choose. I choose. I don't want to live this life this way, or this isn't working, or whatever it is. And there's a stop that shows up inside of us that says, no, I'm going to be in leadership. Even if I completely frick it up, I don't care. I'm choosing leadership for myself. And then from there, it's all about building yourself. I call it building yourself from the inside out, because now you're choosing who you are going to be. Not your stories, not your limiting belief, not your parents, not your family tradition, maybe not your culture, whatever it is that wasn't organic for you, that you have to pull out, get rid of, you know? Okay, so let me change the subject a little bit. I want to talk about money and abundance, because it sounds like this is a path that you've walked. So let me ask this question. What have you learned about the difference between a money and the mindset of abundance?
Yeah, well, the thing about money is that it's such a loaded word. We put so many layers of beliefs and things on top of it, both some of them that are good and attract more of it into our life, and some of them that actually block that from coming in. And you can think about some of the negative ones. Can we afford it? It's not for people like us. Is there enough? Kind of this fear and this feeling like it's not available to us, like we don't deserve it, or we're not capable of attracting or creating that in our life. Yet what I find is that some of the most successful people, when they look at money, they look at money as if there's a ton of it all around them, everywhere, and they live in that place of abundance. And as soon as you start thinking from that place that it is abundant, it actually starts to become abundant. Mm-hmm. And here's the trick. The trick is that as you're going through this path of changing your beliefs, you're going from a victim to a victor, you're going from there's a lack to abundance. Mm-hmm. There's going to be times where that old belief's going to come back up. There's going to be times where that old way of thinking, that feeling like, oh, I gotta hold on to it really tightly, I gotta control it, and that's from a place of lack, where that is going to come back up, and you're going to have to work through and be aware that those thoughts, that those ways of thinking are going to keep coming back to you. But that's the practice. Yeah. And that's what's beautiful about it, is when you're in a place of ownership, when you're in a place of taking accountability for whatever happens in your life, what's so beautiful about that is that means that you get the opportunity to change. Yeah. And it's the harder path, but it becomes easier, and it becomes so much better when you go down it. And the reason that it's hard is because you know that when you look in the mirror and you're frustrated about something in your life, that you can choose it. But that also means that you have to choose to change.
You do. You have to, you have to choose to change. You're stuck because of you. You choose to change, you won't be stuck. All right, let's change topics a little bit. So officially we're here to talk about real estate, although I'll talk about mindset all day long. So Tell us a little bit about your company. What's the secret sauce of your particular company?
Well, I
On
think
Finch.
uh, what's important to understand is kind of like where I came from to where we're at today.
Okay.
Came from a place where I grew up. I didn't have a lot of money. Obviously I went the traditional path and I eventually broke free of that. And I started down this path. When I got into real estate, the first year I bought and flipped over 75 houses in 2 different states way back in, 2016. And what that did was it proved to me that it was possible. But then after doing that for 3 years, I got burnt out.
Yeah.
The same way people get burnt out doing a job.
Yeah.
You flip 200 houses and you look back and you're like, great, I made some good money, but I didn't really create the wealth. I didn't really create the passive income, the recurring revenue that I was actually going after. So even as a guy who's dead set on getting clear on what I want, why I want it, and creating that plan and staying in alignment with it towards that ultimate vision, it's easy to get pulled away. It's easy to get drawn into the new shiny object. And so when we started buying large multifamily and buying large commercial real estate, the reason that I made the change was because after buying, 200 single family houses and operating them in 2 different states, I recognized that there was a huge lack of economies of scale and that it was so much work to do such a small project. And ironically, it's nearly the same amount of work to do a large project. So what my company does is we go out and find, operate, and manage very large institutional grade commercial real estate. We have a debt fund. We offer kind of a fixed income product. And both of those opportunities allow people to either grow their wealth, grow their balance sheet, grow the amount of money that they have, or it allows them to create income, that recurring revenue that they can live off of. And so what I'm really focused on in the business is helping introduce people to what it is that this private equity thing is, what it is that investing in funds and syndications looks like, and then how do you actually go about creating a vision and a plan for your life and then using this as a tool. Because that's all it is. It's not the end all be all. It's a tool to help you create more of what you want.
Beautiful. So right now, you're in the multifamily industry. Right now, what do you think is that? What do you feel like your industry is facing?
Yeah, I think the biggest challenge is that we went from an environment where we were on an 8 to 10 year cycle of growth, where there was a lot of money in the system, where interest rates were low, banks were very stable in what they were willing to lend. And so it was fairly simple to be able to go out and find a property, be able to project what the returns are going to look like, and then be able to execute that. And what we're experiencing right now is that the Fed raised interest rates for the fastest that they've raised them in decades. And what that did was it put a huge cooling effect on the ability to go out and borrow money, right? Mm-hmm. Banks aren't sure, is it going to keep going up? Should we loan out this money for 5 or 30 years at this rate or that rate? And because they're unsure about where the market's going to go or exactly what's going to happen, they're really tightening down. They don't want to be lending out a lot of money in an uncertain environment. And yet there's still a ton of phenomenal opportunities that are out there, but it's even harder to make those opportunities pencil. Because in my business, what I'm focused on specifically is finding discounted properties, finding properties that are worth a lot more than what we're going to pay for them, and then going in and doing a heavy construction project where we increase the value of the property, and we have a very high confidence that we'll be able to do that, so that at the end of the project, regardless of if the market goes up 20% or goes down 20%, we know that the project's going to be profitable. So that type of project, with our experience and when done correctly, can be very, it's a very stable type of investment. But the challenge is when the market is uncertain and there's less lenders available, it's harder to get deals done. Mm-hmm. And so that's the biggest thing that we're experiencing. And then when you pair that with large institutional funds, the Blackstones, the CBREs, and these big funds that have billions and billions or hundreds of billions of dollars that are sitting in bank accounts and they need to place it, they're often willing to overpay. Mm-hmm. So what we found is that even though we prefer buying 1, 200, 300 unit properties, that we've actually found and identified this really unique niche, the middle market, where the small mom and pop operators, they can't get the money together to buy. And the large institutions won't even look at a deal smaller than 15 million in the Denver area in particular. So we've been buying those up, pooling them together into a big portfolio. And at the end of it, we'll sell that to a large fund or institution because it'll be big enough for them to want to take a look at it. And overall, that creates an even better return. So we've been buying less deals than we had bought the previous 2 years, but we're still focused on finding that value and, taking the right, safe, secure steps forward. So, we'll be around for the next 20 years.
That's my next question is, how are you and your company preparing for this upcoming recession? And it sounds like you've already started to shift the asset class you're purchasing into as one of the things that you're doing.
Yeah,
Size. Not the multifamily. It's still multifamily. You've changed the size, the target.
Exactly. But the key is, it's like the core focus of what we're looking for is we want to know that we can confidently and comfortably double investors' money in 3 to 5 years. And so it's way more work for us to buy these smaller properties, these 40 unit properties instead of 300 unit properties. It's more work, but we know we can create that type of return. So we're willing to put in that extra work because it's important to keep buying deals while they're available. And personally, from my perspective and the data that I'm looking at, I believe we're kind of in the trough of the market, meaning we're kind of at that low point where the market, once the lending starts turning back on and turning back up, that we're going to see the market continue to grow and move in the right direction. But that's the hard thing about investing, is everybody wants a 100% sure thing. And the only thing that you can do is you can limit the downside, you can protect the downside, you can do all of the different strategies to making sure that you have control over what it is that the business plan is, but we can't predict what's going to happen. Even just today, I saw an email from Goldman Sachs that says, the recession is likely less than a 20% likelihood that we're actually going to see a recession. So on one hand, you have fear mongers who are believing that we're going to go into a recession that's super terrible. On the other side, the market is operating in such a strong manner that we haven't seen the type of decline that we were expecting to. So the real question is, well, what's going to happen? So you can either sit on the sidelines and miss all of these great opportunities that are right in front of you, or you can try to be super laser targeted and focused on finding what are the right ones that if the market goes up, we're going to make a killing. And if the market goes down, we're going to be in a great spot.
I so want to talk about economics because it's one of my couple passions. One is, mindset and abundance. Another is economy, because I, been investing through 2 different recessions in 2007 and 8 and 9 was one of those. And that was a big lesson for me. And children, another passion for me is children. So I'm not going to go too far down that trail, but it seems to me that, I've been listening to a lot of people who talk about the economy who seem to be knowledgeable and more knowledgeable than I. I like listening to lots of other people's opinions, not just my own. It's one of the ways I like to gather data and information, right? And I'm like you, I'm seeing everything from, oh my God, this is going to be horrible. The Fed's going to drive it into the ground. They're going to break the banking system, all the way to like, no, we're not going to see very much, blah, blah, blah. And what I hear in the middle, which I have respect, I guess, a little more for me, or I'm a little more bought into, is it's just a sticky system. We don't have enough residential housing. We have more jobs than we have workers. And we had, we had trillions of dollars inside of people's pockets in their savings account, which is now being dwindled away. And now we're starting to see customer debt go up. But the point is, the Fed has a lot to work through. How far down the track we're going to go is really kind of how far down the track the Fed goes, because they've got 3 different buckets to try to push their way through before we actually start seeing a lot of effect in residential. Residential real estate. We've got 3 different buffers here.
Yeah, and I talk about this on my show, The Investor Mindset. We were talking on a recent webinar that we did for the community. We were talking about the office market. because you hear all of this news about, oh, commercial real estate is going to crash. What they're talking about specifically is commercial office.
Commercial office.
And in many ways, that's true. People have fled downtowns. Places like San Francisco are seeing a 30% vacancy rate on office when a traditional office vacancy rate is about 5%. It's usually a very stable market, but because of the decisions in some of these cities around COVID, a lot of people have left. And so that's where real estate, when we talk generally about real estate, it's hard to nail down exactly where things are at. But if you get really specific in the market, in the niche, in the strategy, that's where you can really find where the opportunities are. Like a great example is there's a huge migration out of America's largest, most liberal cities. Between 2020 and 2022, over 2 million people left big cities like LA and New York across the country, and they moved. And where they moved to red states or states that are a little bit more red than the state that they were coming from.
Right.
This is not a political conversation. It just happens to be what the data shows.
Thank you.
And the facts
I think
are
that's-
outlining for us. I live in Denver, and Denver happens to be fairly a blue state, but we're seeing a huge influx of people from California who are looking to move their money out of that state into Denver, into Texas, into Florida, into these other places where they're able to create a better quality of life. And so it's really interesting because it's like, if I look specifically at the Denver market, and we invest in a few different markets, but in the Denver market, it's currently 32% cheaper to rent in Denver than it is to buy. It's very expensive to own. It's expensive to rent. But what does that say? It says, well, people are going to be forced into renting, and that's going to end up creating a strong argument why multifamily will continue to be strong. And then when you pair that with the lack of development of, middle income housing, and that the regulations have made it impossible to build something that can serve the middle class, what it really leads to is just, you got to focus on doing the right types of investments and finding the right people to invest with.
Thank you. I always appreciate good economic data. I appreciate it. Okay, let's switch topics a little bit again. Tell me about a deal that went right, and how did you set it up for success?
Yeah, so it's a good example. It's kind of the same type of market that we're experiencing right now. We saw back in November of 2020. There was a lot of uncertainty. There was a lot of fear. The out-of-town buyers were not buying in this market. And what we ended up doing was we just kept looking. Well, where's the value? How can we find those owners who have owned for 15 or 20 years that want to or need to sell? And then how can we create some kind of agreement with them, whether it's seller financing, whether it's a really good purchase price, whether it's a blend of the two, to be able to get a deal done. And so back in 2020, we bought a great property, again, smaller than we like, but a 40-unit property in Denver. And we bought it for a steal. Okay. We ended up paying, just over $3 million for this property. We planned on putting $1 million into it, and we planned on selling it for $5.5 to $6 million. So we plan on doubling investors' money within about 3 to 5 years. And both because we were buying at a time other people weren't buying, we got a deal. And because we were buying at a time where the market was coming back, we ended up seeing returns just skyrocket through the roof. We were able to raise rents from $400 to $500 a month. We had planned on raising them to $1,000, and we were able to raise them to $1,400 or $1,500. So we ended up 3xing plus on that deal, sold it, in the beginning of 2022, and we made a killing on it. Within about 18 months, we had more than tripled investors' money. And yes, the market played a big role, but it kind of goes back to the thing that I was mentioning earlier, where when you can find a very specific niche that you can bring your skills and expertise to, and the market in and out, so you can identify where and what is an opportunity quickly, you can make deals happen no matter where the market's at.
Yeah, you're good. And that is a good example of how what you did to prepare for the deal created the success of the deal. All right, tell me about a deal that went wrong. How'd you fix it? And how did it grow you up?
Yeah. I mean, when it comes to doing deal, I bought 200 single family homes in 3 years. So there's going to be some challenges. Yeah. And one of them in particular was this property that I bought. And it was a unique property because it was in Raleigh, North Carolina.
Okay.
Great market, growing market. And yet it was the type of property you'd expect to see in Manhattan Beach. It was like a stucco building, very unique, 7,000 square feet, very big, gaudy. And we ended up getting it for a heck of a price. And we were expecting to make $100,000 after doing some minor renovations. Yeah. And what happened was, you know, we put it on the market. It sat. And the biggest lesson that came from that deal was two things. One, when you're buying a property that's super unique, that means there's a lot less buyers. Yeah. And when your whole business model is on being able to resell a property, having a lot less buyers is a big risk. And the second lesson was because we had so many projects going on at once, and because there was a personal family connection to the broker who was selling it, it took a long time to be able to change up the salesperson and process to be able to get that property sold. So we could have easily made some changes earlier on, probably fixed some of the problems and had that thing sold sooner. But because we waited a year and we were still going to pay our investors fully what we had projected and planned to pay them, you know, I wrote a check for $70,000 to sell that property. And it's funny because it's like you'd think losing money would feel bad. And yeah, it did. It's not a good feeling. But it was one of the best feelings to have that off my balance sheet and just be out from underneath it, you know?
I do know, actually. I do. Personal experience. Absolutely. Yeah. All right. Last question. What does financial freedom mean to you?
I mean, the thing I talk a lot about is the importance of naming your number. Yeah. And it's really putting that line in the sand. How much recurring revenue do you need to have coming in every month that pays for the life that you want to live? And when you get clear on that number, and when you create that vision for your life, and when you create that plan of what investments, what businesses, what strategies you're going to use that are going to allow you to hit that number, that's what financial independence is. That's what financial freedom is. It's being at the point where you have the ability to decide what you want, when you want it, with who you want it, and being able to say no to anything that doesn't come into alignment. And it's a really beautiful place to be.
Yeah. First time I ever heard somebody say that financial freedom to them was integrity. First I went, oh, I don't understand that. And then I went, oh, wait a minute. No, I do understand that. What I want, when I want, with who I want, and the capacity to say no. That freedom inside of self to go, no, not for me. And I have no thing inside of me forcing me into a corner to accept something that's out of integrity for me.
And the truth is, you can make that decision before you're truly financially free. You can make that decision to go into alignment, but it can be challenging because you're going to have these different forces. Maybe you have a family you have to take care of. Maybe you have a team. Maybe you have all these other things. And so the key is you want to get into alignment. You want to make sure you're living your purpose and you're sharing your gifts and you're doing the right things. And then you want to set up your life and your business so that it stays true to that, you know, throughout every step of the process.
Yeah. All right. Stephen, if somebody wants to invest with Von Finch, they want to check you out, they want to invite you to come speak, how do they get a hold of you?
Yeah, best place is definitely check out the Investor Mindset podcast. If you want to learn about investing with Von Finch, you can head to vonfinch.com. And if you're interested in connecting with me directly, you'll be able to figure it out on those pages. And, you know, would love to be able to serve and work with any of you, either one-on-one or through the community that we run and the investments that we do. So, you know, if you got value from this, you know, definitely shoot me a message.
There you go. Thank you, Stephen. Stephen with Von Finch. So appreciate your time and energy and your clarity, really. This is Christina Suter with Real Estate Breakthrough. To tune in 2 weeks for the next one. You can find us on all kinds of platforms and all kinds of social media. I'm not even going to list them. Have a good week.
Thanks.